Okay, it's time for the final strategy lesson. This is lesson 12, strategy 5, the WTF. So the WTF is one of the more recent strategies. I've been studying it for a long time now. Um, I've seen it for a decade, since I've started trading, because it occurs within strategy, within the IBO strategy, within the CBO strategy. So I've been kind of like watching it. I just never traded it for long, yeah, for the whole time until about, maybe 2021. Yeah, roughly 2021 is when I'm like, there's something here, there's a way to trade this move. There's got to be a way to trade this move. It happens over and over and over again. Right. And that's the thing that I love about like these strategies is because they're trend based, trend following strategies. Right. So they just occur over and over and over again. Right. And they fractal, which we didn't dive that much into fractals yet. We're going to be covering that more in like level 4. But they fractal, meaning like they happen on higher time frames, they happen on lower time frames, they happen on the micro time frames. Um, yeah. But the wave 2-4, some people thought it stands for what the fuck, But it's wave 2-4, the WTF, wave 2-4. It means that we're trading the wave 2 and wave 4 pullback. Right. So again, I started diving really hard into this in about 2021. I ran a big case study on it and it did phenomenal. And from that case study, I started to apply a lot of things into my actual trading plan over the last few years. That pretty much in total is what you're watching right now. It's the final version. So WTFs, I've been trading them hardcore for a few years now. Yeah, and it's actually a very common strategy. I have a lot of WTF trades. Um, Almost as many as IBOs and CBOs because the WTF occurs whenever an IBO and a CBO occurs, right? So going through our points here, it's targeting the wave 2 and wave 4 pullback. So when we go to the strategy 1, the ABO, that's targeting the wave 1 run. Okay, the ABO is targeting wave 1 run, right? So then the WTF is going to be the wave 2 pullback, right? Strategy 2, the CBO, the IBO is targeting a wave 3 run, right? So then the WTF will be the wave 4 pullback, right? The CBO is either a wave 3 or a wave 5 run, right? And an ACB is a wave 5 run, right? So this is kind of how it happens, right? Wave 1, potential ABO, then it breaks out. Wave 1 breaks out. Now, before we get the IBO, there's a potential WTF on a pullback, right? Then it pulls back. Then we can trade the IBO for a wave 3 run. Then once that completes, hey, there's a potential for a wave 4 WTF pullback. And then we're either going to trade the CBO wave 5 or ACB wave 5, right? So this kind of covers the whole picture now, the whole trend, right? So what do I got here for notes? It's pretty simple because the strategy comes up whenever you have an IBO and a CBO on a watch list. So it's like you scan for IBOs and CBOs, and then you see whether there's a potential WTF, right? So what does it need? It requires a wave 1 completed or wave 3 completed. So when you're looking at trading a WTF, you got to be asking yourself, is this wave 1 completed? Is this wave 3 completed on a 1-hour chart? And it needs major support and resistance at the top of wave 1 and 3. So we don't want to be like, we want to make sure the wave is completed. So we cannot, like, if resistance is up here and wave 1 is over there, not rejecting it yet, but it looks like, hey, it might reverse. Well, we can't take that. It needs to be at major resistance because then we have a little bit more confidence, a little bit more certainty, right, in that setup or in that wall. The price action is hitting that ceiling or whatever, the resistance, right? And then decelerating on it, giving us a micro time frame trend change, right? And now we can trade the wave 2. So we need a little bit more certainty, right? Otherwise, there's just going to be like the saying, catching a falling knife, right? If the market is falling, you can just be trying to take WTFs over and over and over again. But it's like if it's not at the right level, it will just keep on falling and topping you out. It's the same thing with advanced breakouts. It's very similar to the ABO, that you got to make sure, just like with the ABO, that it has a major fucking level. It's black and white. It's hitting this shit. It's decelerating on it. It's giving you a micro time trend change, and you're like, you need that certainty that everything is there, that's giving you that confidence, and you don't have any doubt. You need full confidence that this is not starting a pullback, right? So WTF is very similar to the ABO in that sense. It is pretty much an ABO on a smaller time frame, on a micro time frame, almost. Yeah. So why don't we have a look at an example? Yeah. So just the last point there, right? IBOs and CBOs on watch list, and you use the WTFs to trade the pullback before the IBO and the CBO happens, right? So that's the final move of the trend. And here's an example of a WTF before I dive into our diagrams. So I'm going to show one example and I have a few others. But this was on a watch list for a CBO, right? Price action gave this kind of daily bullish engulfing. It stalled at support and gave this bullish engulfing. Now there's a wall there. There's the previous tops, which is a good level, right? Previous stops is you're trading right into. So we don't have that much room to move. You'll find that WTFs are a lot of times the ones that the IBOs, the CBOs that you don't really want to take because they have lots of fucking resistance. There's a fucking wall, and you just don't feel comfortable trading into it potentially. Well, that's a good sign. Whenever you start feeling like that, that's a good sign that, hey, this might be a decent WTF. So it's like, this had a bullish DDP, bullish direction prediction, a strong one off of good support. But hey, you know what? There's previous highs. It could break through it. It may not. There's previous highs, right? Now, on the 1 hour time frame, right? This is always like this again, like comes off of the CBO watches or the IBO watches. So the 1 hour chart was in this pattern, strong bottom, then it broke out, made a new high, right? But instead, and this often happens, instead of pulling back at the start of the day, it had a few hours of a bullish move, and it just tapped the extreme highs. You can see there on a 1 hour. You can see here on a 4 hour. It just tapped the extreme highs. 4 hour chart, right? Just tapped it right there. It just tapped the extreme highs. So it didn't pull back at the time start of the day. Instead, it took three hours or so, and it ran up for an extra 3 hours, hitting that wall, right? And as it hit that wall, now it's like, well, it's at the extremes. If I get a micro time from trend change here, I could trade the pullback. Whereas right here, I mean, you can't trade the pullback right there. And a lot of times people will try to trade this shit. You can't. It has to hit something obvious, something major that you're like, yeah, that's a fucking wall. And now it's time to trade the pullback, right? So you can't do it too early. It needs to hit something obvious and major for you to trade that pullback, right? And until the CBO presents itself. And a lot of times when you catch that pullback, you're not going to trade the CBO long anymore because it hit a wall, right? Like you're trading off of major resistance. So it's like you don't, and if you bank a 2R playing that pullback, I mean, I personally don't want to go long again, right? Back into that wall and potentially have a -1, right? So whenever I just catch a WTF and it runs for a full 2R, I'm typically done for the day. Which is nice because this is the first strategy that will occur. Like we make our watch list, this typically occurs a few hours after, before the pullbacks, right? Or before the IBOs and the CBOs. So that's the idea, right? That's the idea. So once it hits that wall, we need a micro time frame trend change for our entry. And we had it here on 2 minutes. I'll come back to this example, but just having a quick look here, right? It's from an entry perspective, it's a live entry on a micro time frame trend change at support and resistance level, right? So once it hits that, once wave 1 or wave 3 hits that support and resistance level, we're looking for a micro time frame trend change, which is again like a 2-minute, 5-minute, 1-minute, 30-second, whatever the trend is on that micro time frame, right? There's always a trend. There's always a trend. You got to find that trend, right, on the micro time frame. Whenever a 1 hour, remember, a run on a higher time frame is a trend on a lower time frame. So if we're trying to catch a 1 hour, identify a 1 hour run ending to catch a 1 hour pullback, we got to identify the trend on the lower time frame, which if the higher time frame is the 1 hour, the lower time frame is the micros that we call them, micro time frames. 2-minute, 5-minute, 15 maybe, 1 minute, 30-second potentially, right? So whenever 1 hour is running and we're trying to catch the reversal, this is every single entry for every single strategy, right? Whenever the 1 hour is running or pulling back and we're trying to catch the 1 hour reversal point, it's the trend change on a micro time frame. So the same vibe here, right? Live entry on a micro time trend change at that support and resistance level. And again, it's a 2-to-1 target down to, we're playing the pullback now. So we're targeting 0.32 Fibonacci retracement or better, right? And stop, it's going to be, well, below or above the price action and the support and resistance level, right? Just so we can get that 2-to-1. And again, we want to nicely protect it. So let's go to our drawings and add into it. So we'll come back to more examples, but we've been building on this, and we have the ABO, the IBO, the CBO, the ACB, right? And we know that there's 2 versions of the CBO. I have only one here, the wave 5 CBO, but we talked about how, this can be a wave 3 CBO and look very similar to an IBO, but it just breaks both, the 1 hour 50, the 1 hour 200, right? And therefore it's a wave 3 CBO. Yeah. So how is the WTF identified? So the WTF can be identified in a few different ways. Let's take this ABO here. Move it up. I'm going to delete a few things. I'm going to delete that. But let's take this ABO and put it up here. This is where we're going to put our WTFs, right? So the ABO at the bottom there is capturing the wave 5, the end of wave 5 and capturing the wave 1 run, right? Now, imagine this wave 1 just keeps on fucking running and running and running, and now it hits like the 1 hour 200 and the 4 hour 50 EMA, right? Becomes overextended, and it's now hitting the 1 hour 200 and the 4 hour 50. And if we can put another level there, like maybe a horizontal line or a trend line, even better, or like a pivot, even better. R1, S1 pivot, right? So let's just assume there's also like a horizontal line there, right? So instead of pulling back, like instead of ending somewhere here and pulling back for an IBO, right? Which then we would be targeting this area, right, with an IBO. What instead happens is this does not pull back. Like we may flag it, like ABO breaks out. Now we may flag this for an IBO, but it does not pull back. It instead runs up to that target. And that's the major key. It does not pull back. It instead runs and becomes overextended. And it hits that wall. Well, it still fucking needs to pull back. It's still a wave 1 breakout. There still needs to be a pullback. So we're going to use our Fibonacci retracement and like measure it out, right? So as it's hitting that wall, you should have this identified on your watch list already. Alerts should be going off. And now you're trying to position size. So entry at around that support and resistance level, 2-to-1 down to 0.382. And therefore our stop is got to be equivalent to that. Now, there's a major key here. The major key is that we cannot have, like, this needs to be precise. We can do one-to-ones on this and enter lower, but I mean, based on numbers, our numbers lesson, one-to-ones are fine, but two-to-ones are just much better, like much, much, much better. So if your standard can be two-to-ones instead of one-to-ones, and if you're optimizing for two-to-ones, it's just so much better. It's literally so much better to be optimizing for two-to-one target instead of a one-to-one target. One-to-one target allows you for a little bit more flexibility with execution. You can enter a little bit later, and so on. Two-to-one target requires precision, for every single strategy. It requires precision, it requires patience, it requires waiting for that value area to be hit. And then once it's hit, and making sure that we enter within that value area properly, not too late, not too low, because it fucks up our position sizing, right? So going back here, we cannot be entering too far down, because then in order to get a 2-to-1, we need to stop clip, and that's just too fucking risky. Like, we cannot be putting our stop just above the level. It needs to be nicely above the level, right? Otherwise, yeah, so we can't enter too low. We need to be entering close to that support and resistance level so that we can make sure we can get a 2-to-1. And with that, our stop is still fucking safe, That's very important. And if you can't get that, obviously, to me at least, there's no trade. If I can't get that 2-to-1 position sizing and feel good with it, I don't want to feel anxiety. I don't want to feel stressed that my stop is going to be hit because it's too fucking tight. A lot of trading, we're going to be diving a lot into this in level 2, peak performance systems. But when you're building a trading system and when you're executing, when you're trading, there's a lot of emotions attached. Well, a good trading system takes away the emotions, right? So if I enter too late, too low, and I still try to get a 2-to-1 position sizing, whether it's an ABO, IBO, CBO, WTF, ACB, doesn't matter. Sometimes the stop will be tight. It'll be like clipping the high, The stop would be where P1 should be. And all of a sudden we can't do P1 because our stop is already there at full risk, right? Because we entered too high. And our stop is tight. And now, if price action is not going in our favor, maybe chops around a little bit, all of a sudden there's going to be anxiety. There's going to be stress. We're like, I might get tapped out of this trade, and the idea might still play out. We don't want that. We don't want to feel that. We don't even want to, like, I at least don't want to feel that stress. I don't want that anxiety. So to me, it's more like I need precision. I need to make sure that I get in at the specific time, so I have an ideal entry point, so I have a good 2-to-1 target to a safe level, and so that my stop is nicely fucking protected, so that if price action consolidates a little bit, around my entry price, I'm not sitting there in fear and anxiety, having stress that my stop is going to get tapped for full loss, and the idea still plays out. When my stop gets tapped, the idea should be done. It should be failed, like just over, And the key of that is one thing: making sure you enter at the right price. 1-to-1 position sizing, I mean, you got freedom. You can enter way the fuck down and still have your stop protected. But I mean, you're getting half the reward, half the return for your time, So that's kind of how I started to think about it. I'm like, well, what can I change and optimize to make my trading better and get better returns? And I'm like, well, optimizing execution and position sizing for 2-to-1. I'm catching the same fucking move. I'll be in the trade for the same amount of time, but I'm doubling my return. Instead of a 1, it's a 2. And there's a only thing that needs to be proper is the execution needs to be great. It cannot be sloppy. It cannot be loose. With a 1-to-1, it allows for sloppy execution. 2-to-1, sloppy execution is not allowed. That's the thing with good trading. It requires peak performance, high performance. And you just can't be sloppy. You know, it has to be precise. It needs to be exactly what you want. Otherwise, you're messing up the numbers, right? So precision is important. Sloppiness, not so good, you know. So that's WTF. That's one WTF, right? Playing the wave. Wave one becomes overextended. Wave one is hitting some sort of potentially probably the 1 hour 200 and the 4 hour 50 MA, and that might line up with S1 R1. It's great if it does, or another horizontal level. It's nice to have two things the price action is hitting. Sometimes we feel okay with just trading off of the 1 hour 200 and the 4 hour 50, but it's nice to have another level like R1 S1 pivot or a horizontal support or some trend line. So that's one WTF option. Another WTF option, and again, this will be roughly the same on like, you know, right there. So if we just copy our IBO data and do the same thing, you know, just utilizing the head and shoulder pattern here, right? This would have been flagged on watch list. Yeah, this would have been flagged on watch list as an example for this pullback. Well, if the pullback doesn't happen and this shit just runs up to the 1 hour 200 EMA, right? Now it becomes overextended. Now Fibonacci retracement needs to go up because obviously it did not pull back. We probably have R1 pivot in that area because that would have been our target, 1 hour 200, you know, 4 hour 50, R1 pivot. If we're going long, we'll probably be there, and that's R1 pivot. I typically have it in orange or yellow, orange, you know, so yeah, so it should be hitting the 200 EMA or the 4 hour 50, which is roughly the same level, and maybe like R1 or something, you know, and once we get deceleration and a micro time frame trend change in that area, all of a sudden you're playing that pullback, wave 2 pullback down to, you know, 0.3 to Fibonacci, the new 0.3 to Fibonacci. And again, entry needs to be closer to those levels so that we can have, so that our stop is nicely well above those support and resistance levels, right? It's a major key, major key. Otherwise, if we enter too low, it becomes either a 1-to-1 position size, or if we want a 2-to-1, I mean, we're stop clipping, and that's just not safe. That's just stupid, literally. Yeah, so precision on execution. So that's these two examples. Obviously, they're wave 2 WTFs, right? ABO has happened, and now it's hitting the wall. IBO did not pull back. It just hit the wall. Same thing. IBO on watch list, and it just did not pull back. It just continued to run and hit the wall. I hope that makes sense. It's pretty obvious, right? Pretty simple. Does not pull back for the IBO. It just fucking runs. Now, it can also be a wave 3. Oops. Yeah, it can also be a wave 3 CBO. Or sorry, wave 3 double. It can happen on a wave 3 run and to capture the wave 4 pullback. Right, so if I copy, paste, and move this up, I'm gonna have to clean it up a little bit. Let's clean it up a tiny bit. Make it a bit tighter. A little bit tighter. Right, so let's assume maybe the IBO did happen in this case, right? And price action ran into a full wave 3, right? A full wave 3. So it smashed through the 1 hour 200, probably R1, pivot, 0.618, and it went into a full wave 3 run. A full wave 3 will be the biggest of all the waves if you study Elliott wave theory. It's the biggest of all the waves. Wave 1 is a breakout wave, wave 2 is a pullback, and a wave 3 will be the biggest of all the waves. And typically, at its full extent, it's hitting 1.272 Fibonacci extension, and if it becomes overbought, sometimes it can hit 1.618 or even smash through it. So 1.272, 1.618 is good. So if we're getting wave 3 and it's kind of topping right there, and we're maybe waiting for a pullback for CBO, and we're like, the level there's 1.272, maybe you can add another, maybe there's, again, it's nice to have another level such as horizontal resistance or something, or trend line. And if it's like hitting this and this is flagged for CBO watch list and you're like, it's the wave 3 is fully extended and there's some resistance there, it is a nice CBO, but you know what? Once I get a micro time trend change, I could trade this pullback down to 0.382 Fibonacci retracement, just like where the CBO entry would be, right? So down to 0.382 and the pivot and such, right? Which will be roughly like in that area. So now we'll be looking to, take that entry around there and have a 2-to-1 position. Again, nicely protected, right? So it's another way that this will occur, right? It broke out into wave 3. Wave 3 is completed, and now we're waiting for a CBO, but it might already be hitting a wall, right? As an example. And we're trying to capture that wave 4 pullback for a 2-to-1, right? Something else that might happen is like wave 3 is sitting, there's no resistance, you're waiting for a CBO, and you're like waiting. R1 would probably be somewhere up here too, maybe around 0.618. It's R1 where you would want to target the CBO, but it doesn't pull back, it doesn't pull back. Instead, it just continues its run into R1 and now 0.618 Fibonacci extension. And it fucking hits that target, hits R1 target on where the CBO target should have been, right? It did not pull back, it ran. And again, that's one of the characteristics. It doesn't pull back, it ran. And as it ran, now obviously it brought Fibonacci retracement up, and we're doing the same thing. We're trying to get that proper position size where we're entering at the highs, 2-to-1 down 2.32 or better, and therefore a stop loss nicely above the highs for 2-to-1, And there we go. Here are our WTFs. Yeah, it could obviously, the ACB can also obviously be a WTF, right? So that's typically like when the CBO doesn't pull back and it just runs, playing this pullback will eventually potentially become an ACB long, But yeah, so it's playing those pullbacks, wave 2 pullback, wave 4 pullback. Main characteristic is like IBO on watchlist doesn't pull back, it just runs, or the ABO runs all the way into the EMA. IBO doesn't pull back, it runs into target. CBO doesn't pull back, it runs, so on. So we kind of covered everything with those diagrams, but let's have a look at some live examples, right? So we covered all of this. So let's look at examples real quick, and then we'll start to wrap it up. So the first example that we started with, right? So it's a CBO on watch list, right? So on the left-hand side, we do our analysis, right? So this is a CBO on watch list, and good CBO, but there's some resistance. And instead of at the time of watch list, which is where the pivot was formed, right here, right there, it did not pull back. It instead ran into that resistance, which is a potential target, hit it, right? And now it's like, okay, well, we're going to trade the pullback, waiting for a micro time frame trend change. And I guess you could have entered right there, but I don't think this was hitting the wall yet. This hit the wall. This wick hit the wall. So as these wicks hit the wall, eventually it broke down and there was a trend change, right? Toss my stop loss above it. Stop loss seems a bit tight, right? But it is actually like above all the highs. You know, it's above this, the wall, the resistance levels, the extremes. There's no other wick, so the stop is actually above. So if it breaks out, I mean, it's just clear, right? It should be out. Yeah, so stop above, and again targeting 2-to-1 down to 0.38 to Fibonacci retracement. And the management kind of stays the same, you know. So you'll notice that with WTFs, the 15-minute a lot of times will be a little bit wider. So when that 15-minute breaks and it goes into a bearish trend, obviously P1, remove risk. Once it pulls back, forms a lower high and continues, we're following that 15-minute. We do P2 and clip the high and remove risk, full risk. And then, yeah, we're just doing our thing, right? After that, target was hit. So this is going to help later on 2-minute. Entry, price action fell, broke the 15-minute, P1, clip the high, remove a little bit of risk. Then pulled back. And as it started to fall, right, we do P2 and clip the highs and remove all risk, break even, and then target hit. Right, it's the same kind of thing. Let's have a look at another example here. So this is, this is another one. And you can see on this daily chart that there's a major support level right there, right? And this is obviously an IBO on watch list, or CBO on watch list. So one daily chart had this big bearish engulfing, right? But right into resistance or right into support. But a nice strong bearish engulfing. So it was flagged for a CBO, but it hit a fucking wall. There's some support there. And but it was flagged for a CBO. Like it looked actually like a really decent CBO. You know, if price action pulled back, it's a really decent CBO, but there is support, right? And when you can identify support, this is one of those that, yeah, you know, like this was all a wave 1 breakout, right? So this was like a wave 3 CBO. But it hit support. It hit 1 hour support, which is also 4 hour support, which is that daily support. And we can see it very clearly here on a 1 hour chart. It's pretty clear and obvious. Hit it, decelerate. And I was patient. It decelerated. I was pretty patient on it. On a 4 hour chart, there was a trend line that was also hitting in that area. And I'm like, yeah, you know what? Start of the day happened and there was an entry at the start of the day, but volume is low. So I don't trade during like the first hour. So I waited and then price action dipped a little bit. And then as typically a lot of my WTFs happen around this time, as now it starts to break out, as it started to break out here on 5-minute/2-minute, I went live, right? In the value area, stops below, right? And targeting 2-to-1. 0.32 was a little bit higher, so I did 2-to-1 roughly like into this region, right? 0.32 or better. And yeah, entry, it took a while for the 15-minute to break. So eventually broke that 15-minute. A few hours later, I did P1. And then it followed through. I did P2. And then it missed my target right there on a 2-minute. It just kind of missed my target, started to reverse. And I was out on a 30-second. This ended up being a 30-second trend here, right? And as it missed my target, broke that 30-second trend, and I was out for 1.4R. So that's example 2. Example 3 is again, this is an IBO on a watch. And you can see that, yeah, obviously the daily chart doesn't have much, but it's a bearish bias. The daily chart's obviously, it's always going to be the bias overall is going to be against you because you're playing the wave 2 pullback, right? So, and again, there's going to be an IBO or CBO on watch list against you, but you're playing the pullback before the IBO and the CBO presents itself. So the analysis is always going to be against you. But as this was flagged for an IBO, right at the start of the day, right here, as it was flagged for the IBO, it had a move right at the start of the day, but that was low volume, so I didn't execute it, and I did not take this trade, the first one. But the idea is hitting the 1 hour 200, it's hitting the 4 hour 50, right? The 1 hour 200 we can see is a really good level. It acted really well in the past, the recent past at least, right? Had a very similar kind of double bottom. So then it double bottomed again. So I'm like, that's a good level. It's a major level, right? 1 hour 200 / 4 hour 50. It's a major level. And when you're looking at the 4 hour 50, it's got even more hits, right? Just in general over the last few months. So I did not take the first one because it was low volume and it just moved without me. Then eventually pulled back and formed a double bottom. And as it formed this double bottom, now you even have more conviction. You definitely don't want to fucking short this shit anymore. But it's like, yeah, I'll fucking take it long because it double bottomed at support, right? And now as it double bottomed, trend change on the 2 minute in the values area, 2 to 1 up to 0.382 or better. In this case, the pivot and the 1 hour 50 EMA, and stop below the lows, right? Protected below the lows. So entry P1 happened when it broke the 15 minutes, so a few hours later. In that case, I jumped right into P2. You see how in the 2 minute time frame broke out, it consolidated from this kind of base, went up, and slowly went up, and this is when it broke the 15-minute EMA. Well, a lot of times we go to P1, but because there was this nice base, I just went straight to P2 and just remove risk. You can do that. You know, if there's something to clip and it's obvious, you can jump straight to P2. And then, yeah, it just ended up trending, and eventually it went up higher, close to my target. I did P3. I clipped this low right there, which looks like it's you know, this is a 2 minute chart, but this looks like now it's pushing on a 1 minute or 30-second trend. I clipped this low, and eventually I got taken out right there. I could have gone more aggressive and maybe exited aggressively, but in this case, I was just taken out when it broke down on a 2 minute for +1 with P3 management. And later, as I got tapped out, target got hit. So, I mean, it just happens, right? But just when I exited, boom, target hit. But that's another WTF. And let me show you the final example that I have saved here for this lesson. So this is a CBO on a watch list. And you can see the daily chart is really nice. You know, bottom, the nice bullish kind of momentum. But there's the phase line on the daily chart. The price action is still holding. But it was flagged for a CBO. But it was flagged for a CBO right here. You know, right there. And it never pulled back. And that's what I mean. It's one of the characteristics. It never pulled back. And instead, it fucking ran up to R1. And I drew my Fibonacci based on wave 1, wave 2, wave 3. And it kind of lined up with 1.272, right? So as it hit that R1, it did not pull back for the CBO. It instead ran, became overbought, started to hit R1 and 1.272. I drew that daily phase line / trend line on a 4-hour chart, and it was in that area too. And now, yeah, I'm like, okay, well, I adjusted my 0.3 to Fibonacci, figured out where my target is going to be, and it's like, okay, it works. Got in on the 2 minute entry. Stop nicely above the highs. You can see it on a 1 hour, nicely above the highs, and a 2 to 1. And then price action chopped around a little bit. Eventually started to fall, but it never broke the 15 minute, right? So I didn't do anything. And then pulled back, went back up to the tops. Now formed a double top on a 15 minute, a little double top on a 1 hour, right? And now it's giving another WTF entry. If you didn't enter on the first one, here's another shab, maybe even better. Similar to this previous example, right? Where it gave a double bottom. So it's nice when we get that. It's actually really nice when that happens. If you sometimes miss the first one because you don't feel comfortable enough or whatever, and then it goes and double tops at it, even better, even better. But we can't wait for that, because a lot of times it doesn't double top. So I still prefer to take the first entry. Yeah, so then it double topped and then it fucking fell, right? So as it double topped, you can see on a 15-minute top right, as it double topped, it eventually broke the 15-minute EMA, and that's when I did P1 and clip the highs, right? So on a 1 hour, clip the highs, remove about half risk at that point. And at that point, I just started to slip, so I did P1. You see it on a 2-minute chart now, 15-minute just kept on falling right to target, right? It's nice when that happens. So I did P1 when the 15-minute broke, consolidated a little bit, fell down. I did P2, removed all risk at this point because there was something to clip. So I just kind of removed risk, put my stop right there. And then it just pulled back a little bit again and fell to target. And that's it. Yeah. WTF, wave 2-4 pullback. The wave 2-4. Pretty neat, right? Pretty simple too. So this is the whole package now. At this point, you know every single strategy. 1, 2, 3, 4, 5. IBO, CBO, ABO, IBO, CBO, ACB, WTF, right? And now with WTF, it actually adds a lot of potentials because every single time we have an IBO and CBO on watch, if that shit doesn't pull back and it runs to target, or it might already be sitting at major resistance, we can potentially trade that WTF. And if we catch it, hit a 2R, we're kind of done for the day. At least that's kind of how I look at it. If I make a 2R in a day, I call that day a success and I'm done. And it's easy. A lot of times it happens early in the day during the Asia session, these WTFs, right? Because we flag, make our watches, look for IBOs and CBOs. And a lot of times price action needs to pull back, and therefore those IBOs, CBOs will be happening late Asia, early London, maybe early New York, right? So if we're capturing the pullback, well, the pullback's going to be happening during Asia or whatever. That's it. Well, I hope you enjoyed this lesson. And I'll see you in the next one. So it's all the strategies. I'll do a summary at the end. So I'll see you in the next lesson, which will be the summary. Take care. Bye-bye.